going to move on and connect with Mihir Vora, who joins in from Max Life Insurance to talk about the outlook on the markets. And Mihir, good to have you on board. Why don't we start off with the auto space, because it clearly seems like the revival seems to have gathered some pace because you have the likes of Maruti, Hero Moto. They have managed to outperform, and that's largely on account of the festive season as well as the easing supply. How have you read into the August auto sales numbers?
Good morning, Awan. Always a pleasure to be here. Auto is one bright spot in the overall discretionary consumption space. You're right. And since we are seeing some traction coming back into the discretionary space, especially in the rural side, I think the next few months could see better numbers from the auto space across segments, not only two-wheelers, but even passenger vehicles and even in tractors where we see rural demand picking up. The good thing is that we're already very close to the peak festive season. So even when we don't have, say, a Diwali in this month, but the inventory building and the stocking of the pipeline has to begin, because we need the industry needs a high level of inventory for the festive season. So I think for the next couple of months, at least the traction should be there.
You know, the AGR verdict seems to suggest, according to all of the analysts as well as brokerages, that this is Advantage, Jio as well as Bharti Airtel, whereas a staggering amount is due from Vodafone Idea, who may find it tough and may have to resort to, of course, tariff hikes and raising funds. How have you assessed the overall AGR verdict in light of the individual telecom companies?
So broadly speaking, the good thing is that at least this big uncertainty is out. Now, because of this 10-year window, we need to see how the industry shapes up, whether it boils down to two players or we continue to have three players in the industry. But the bottom line is that the worst of the price competition is definitely behind us, whether we are in for a duopoly or three-player system. And to that extent, given that data is going to be priceless, the bandwidth consumption is only going to go up, and with work from home accelerating the need for better bandwidth, better connectivity, I think the good times are for this sector.
Mihir, would you share the same enthusiasm for steel as well as the sector? Quite a few upgrades coming in. The fact that it's most investors are still underweight. It also hints at a severe catch-up as well, which is ready to take place in this space. Do you like any of these stories within the metals universe, or perhaps steel in particular?
Yes, frankly, in India, steel is pretty much the only play as far as pure metals is concerned. And it has two tailwinds, I would say. One is that overall global traction is picking up. We are beginning to see China getting back on a growth path, and more importantly, because of the trade friction and the government's strong resolve this time to proactively make sure that India is not a victim of dumping, especially from China. We are seeing, even within the steel space, certain segments being protected and more anti-dumping measures being taken. So I think there's a tailwind of global demand pickup. So overall global prices are stabilizing and even going up. Especially iron ore has been very strong, and plus we have the increased protection scenario for the local industry. So to that extent, it's a sector which has deep value. We're not typically value players, but we do believe in playing global cyclicals, and this seems to be an opportune time for that.
Sure. What about banks? And we've been chatting regularly with our other market experts as well, Mihir, because clearly seems the moratorium issue is a big overhang. Hopefully we should hear something on the interest loan waivers from the apex court today when the judgment comes by. But this really seems to be a big sentiment dampener when it comes to the entire financial universe.
So financials is a segment where we are playing a bit cautious. The next month and a half is going to be very crucial. This interest issue to me is a smaller issue. The big issue is what happens, what is the behavior of borrowers once the moratorium is off. So now we have the moratorium, time elapsed, and in the next month and a half, we will begin to see how many companies come back, how many individual borrowers come back and ask for restructuring of the loan. So the restructuring number is something that is very keenly going to be watched. The second thing is that, because of the global liquidity flush, cost of funds will continue to be benign. So to that extent, that's a tailwind for the sector. But the most important thing is how the restructuring story plays out. Having said that, the good thing is because of the markets having sustained well in the last few months, a lot of the good private sector banks have managed to raise significant amount of capital. So to that extent, they are well capitalized and ready for growth as and when it comes. So we would relatively be picking those banks which have no problems of capital, which is at least most of the large banks in India.
What about pharma, Mihir? A little bit of a cool off, of course, that we've been seeing of late, at least in the frontline names. Where does your preference lie in pharma?
So in pharma, broadly, it's a mixed bag. We are very bullish on the sector. So as a sector weight, we are significantly overweight and continue to believe in that space. But within pharma, earlier it used to be more of the formulations exporters, the generic exporters, which continues to be a story. But relatively in the last few months, we've also increased exposure to companies which have strong manufacturing facilities and which have strong API capabilities, and which are also planning to go more and more backward integrated into the supply chain. So I think this Make in India initiative, especially for pharma and chemicals, is going to be a big benefit, positive for the sector. And I think the government is also making sure that we are putting the right amount of incentives in the right segments. So that's one segment where we continue to be bullish. And as I said, from formulations, where we continue to be bullish, we are also now looking at more of the contract manufacturers and the API manufacturers.
Okay, so that's on some of the headline pharma names as well. And another theme that's topped out, of course, is chemicals, or has it? Would you continue to be bullish on that front too?
Yes, while you're right, valuations have run up a bit and maybe a bit ahead of time. But like in the pharma segment, this is one segment where not only the Indian government, but also global multinationals are actively looking to de-risk away from China. And the thing is that the size of the Indian industry is a fraction, maybe 1/10 of the size of the Chinese industry. So even if, say, 10% of Chinese production has to move out, it can mean a significant amount for the Indian producers. So most of the companies in this segment are not very big, 1,000 crore turnover, 500 crore turnover, maybe 2 to 3,000 crores turnover. So these are companies which are small and can grow significantly. The thing to watch out for is how actively and how fast they are able to execute their growth plans, because land, pollution control, approvals, etc. do tend to take time. But if the government is serious, and it seems to be, then I think we can scale up very rapidly. So to some extent, these premium valuations can be justified.
Sharing with us your outlook on the market. So clearly looking at auto as a sector, as well as the financial space, where you remain a bit cautious, but post-moratorium there will be more clarity.